Hey everybody, good morning. Happy hump day to you today. It's time for Trader Talks in today's market. My name is Brent Moores and Mr. Kevin Horner is out today, but we are lucky to be joined by Brett Crowther, a longtime friend of mine and longtime market observer and participant. So I'm glad to have you with us here, Brett. Good morning.
Thank you. Good morning to you too, Brent. It's good to be back with you. We've worked together a long time, and it's fun to have this chance to be with you this morning.
Yes, I'm hoping this isn't the last time either. I'm hoping this is the first of many, but glad to have you. You know, you guys can follow Brett or myself on X, formerly known as Twitter, at BrentMooreCS, at Brett Crowther CS for additional content throughout the week. And before we hit up today's markets, let me just mention a few important disclosures for everybody here. The information today is for general informational purposes only. And you know what? It's not an individual, it's not a recommendation of an individual chart, any individual strategy, anything else there. We're just here for education for you guys and to help keep you up with the markets. Options do carry a high level of risk and are not suitable for all investors. Spread trading must be done in a margin account. Multiple option strategies can involve multiple transaction costs. Short options can be signed at any time up to expiration, regardless of the in-the-money amount. Past performance is not a guarantee of future results. And Schwab does not recommend the use of technical analysis as a sole means of investment research. We'll be doing a fair amount of technical analysis today, so just your heads up on that. And all investing involves risk, including a risk of loss. What are we going to do? Well, we're going to follow the same format that we often do here in Trader Talks, and that is we're going to look at the general trend of the major market indexes to start us off. We'll look at different time frames and just try and get a handle of the market, largely from a technical standpoint, but there's some fundamental aspects, macro aspects that are affecting the market as well. And we want to welcome all of you, whether you're watching live or on a recording. Brett, let's take a look at the overall market here. I'm going to pull up the S&P 500. That's Starbucks. We'll get to that in just a little bit. But we had 6 consecutive sessions of highs or higher increased closes on the SPX. I don't know where we're going to end up today, but we're down about 1.5% this morning. Brett, what do you think?
Yeah, so some news came out this morning, right? Macroeconomics are what is driving the action this morning. You just mentioned the rally that we've seen for the last couple of days, which has been interesting. It's actually put it up above an inflection point that we're going to talk about here in just a minute. But early this morning, news coming out, GDP, that was a little bit on the sour side, and so the market's reacting. But Brent, you and I have been watching this actually this morning, and it actually has kind of pulled back a bit from where I saw it earlier this morning.
Yeah, so here's where we are right now. I actually, on my chart, just to orient everybody, I have a 20 and a 50-day moving average. Everybody's aware of the pullback that we had. We hit our low back on April 7th, and we've had a pretty good rally. We've had a higher low since then. This was a big area of big concern, I think. We had a resistance level here, which was an older support area. I could maybe move that up just a smidge there on this. But the point is, that was a potential resistance that we broke through. That was a big line. And at the same time, basically, we broke through a diagonal trend line as well. Above that, now the question is always, are we going to stay above that? We're still kind of there, Brett. Are you convinced we're going to stay above that line?
Well, convinced, anything can happen, right? The market will do what the market will do. From a technical analysis standpoint, it is a fairly significant level of support and resistance with all the touches that you just mentioned there. Now, is interesting, in fact, I put together a YouTube short just talking about this point that it's at right now, just a few days ago, and I drew a Fibonacci. So maybe you could help us out there, Brent, and draw some Fibonacci's from the high that we saw back in February down to the low about April 7th. Go to that long candle.
I'm going to go to high.
Yeah.
to the very low of that long candle, which is right about there. And we have these different Fibonacci levels. And where do we go from there, Brett?
Well, so various Fibonacci's have various implications. Some technical analysis will look at the 50, the 61.8, and the 38.2 as kind of the more significant ones, more so than the 78 and the 23. But regardless, the 50 right there in the middle is lining up with where you drew your support and resistance line. Just further indication of all those touches that it had. So what we've seen is a 50% return from that drop that occurred over those few months. Now, when I talked about this just a few days ago, it was actually down below it during the day. However, when the day ended, it was back above it. And so one thing to keep in mind is, not to get too concerned about what's happening just at that moment, looking for how does it close out, what's the total action on the day. So it's a little early to tell, if it's going to fall back down and break through it, or how the market is really going to adapt and absorb this GDP report.
Yeah, it is a little bit early, but you mentioned a YouTube short. Let me just orient everybody and show everybody where you can get those. I'm going to just pull up, let me just bring a different page over that'll actually fit over here. I just went to YouTube, everybody, and I typed in Trader Talks Schwab. And for everybody, if you haven't subscribed yet, I just typed in Trader Talk Schwab, go down to the channel and click on that, and it'll give you the choice to subscribe there. But also, Brett, where would we find those shorts there on this?
Just right underneath where you're at, right there. You click on shorts, Yep, click on shorts.
Right there. You click on shorts, and you can see some of the shorts there on this. And
it's that far left when I was talking about can this tool identify support and resistance, and that's the one I was mentioning that while I was recording that, it was below it, but at the end of the day, it closed back above it. So it's just one of those things to keep in mind.
So there you go. Make sure you subscribe to Trader Talks, the Schwab Trader Talks channel, everybody. So let me just point out one other thing on the Fibonacci, and what I'm going to do is I'm going to just expand my time frame here out a little bit, and let me go, actually, I've got quite a bit on this graph. So what I'm going to do is I'm going to clear the drawing set just to kind of give us a blank slate here, so to speak. And I'm going to go from a little longer term. I'm going back to 2023 up to the high we just reached. And what we'll see here is you can see some of the longer term Fibonacci levels there on that. And we bounced right up about that 61.8% level. So in other words, when we're doing these are, they can be support or resistance lines for you as we're looking at that. Now, another thing that I would say is on the SPX, we've talked about, is this a trend? Well, we've got higher highs, higher lows now on that. Pullbacks are probably not unexpected. Things don't go straight up. And so we'll see how far that drops, but we do have a little bit of a pullback today. But one thing I would mention is we can look at market breadth here as well on this and just kind of see how many stocks out there on the S&P 500 are above their 50-day moving average. So let's just kind of see a progress of that. And you can see that's dipped down. And this is going to be basically in terms of percentage. About 32% of S&P 500 stocks are above their 50-day moving average. You can see that's come up quite a bit, down from a low of 4%, which is extremely low level there, everyone. And so, we're seeing some recovery, not just in the Mag 7 stocks or the bigger stocks, but we're seeing some recovery along the way here. The NASDAQ and the Russell 2000, let's take a quick look at those just to kind of complete this. NASDAQ, obviously tech heavy. Thoughts on this one here, Brett? NASDAQ.
Well, Nasdaq, you're going to see a lot of them moving in the same way, right? We're seeing a lot of the impact of the GDP. And there's other reports that came out this morning. In fact, just looking at some of the comments on the side where the ADP report came out, that was light as well. I think it was 67,000 jobs versus 147,000 that were expected. So that was on the light side. However, something to keep in mind here, Brent, is the ADP report. It can have a wide variance of accuracy. I mean, there's times it can be off by 100,000. And so, as I've watched the ADP report and how it kind of leads up to or implies what could happen with the non-farm payroll that will come out this Friday, it can be highly inaccurate or not a very good guide or gauge to see how that the non-farm payroll will come out. And so, a lot of news is going to be taken into consideration. Even with the GDP, it came out weak. We had, what is it, negative 0.3, and the expectation was for positive 0.3%. And so it was expected to be just about flat. It was on the negative side. It wasn't hugely negative, but the point is it was negative, and that's what was concerning. I think everyone anticipated, not everyone, but most people anticipated some sort of a decline, a weak report on that. But I think it's just a little bit more weak than most expected. And so now we're seeing the market react. And we saw what happened with the SPX. It dropped down a bit. We're seeing it across the board with the NDX. And you'll probably see it across most all indices. But again, looking to see how will it end up on the day.
Yeah, well, certainly we've had a lot of intraday volatility, Brett, and what the way we start the day isn't necessarily the way we end the day. And also, what I would say is, after you've had a move up significantly, same thing with the big move down. You have a big move down, you tend to have it tends to overshoot the mark maybe. Well, maybe it's been high time for a little bit of a pullback in the market, and this is just kind of an excuse, if you will, for the market pulled back to maybe a little bit of profit taking on this after the move up we've had on this. You can see the Nasdaq down almost 2.5%, which is a little bit more than the S&P 500. That's typical for the Nasdaq. And we can also look at the Russell 2000 here. I think we're seeing a lot of the same things though here. Maybe on the rut though, if I were to say, where was our support level, older support, potential resistance, we actually came right to that level there. Yeah. So maybe a little bit of difference on that.
This one is different. I'm glad you brought this up, Brent, that, the others, we saw them do, break above that significant support, old support, new resistance level. They did break above, but the rut, however, failed to make it above there, and it did bounce off that. And so we got an outlier here that just couldn't quite get the same oomph that the others received.
Yep, absolutely. And so all in all, a little bit more uncertainty in the market. Carol brought up the VIX. Here's our VIX chart. Obviously, probably unsurprising that the VIX has jumped a little bit. This is a kind of a market uncertainty indicator, so to speak. Nice big candle today. Well, that's after we've settled down quite a ways. But, there's one thing I wanted to show everyone on the VIX, and that is this. The VIX, we're looking at what the current VIX is, the current implied volatility on S&P 500 options. But one thing we can do is we can look at the difference between the implied volatility on S&P 500 options and the implied volatility on the VIX futures, the level on the VIX futures, excuse me. So what this is doing, and what I'm going to do is I'm going to zoom out to a 3-year chart, and I'm going to change this to a line chart just because I think it's going to be a little bit easier to see here. So I'm going to change candle to line, and I'm going to make it a little bit thicker so we can see that. You click on apply, and actually hold on, sorry about that. I'm going to do that one more time. I don't want those moving averages were a little bit confusing on there. So we're going to make this a line chart. So what this is doing is, this is going to tell us the difference between where the VIX is right now and where the expected future of the VIX is. And when we look at this, and I do this from a 3-year standpoint, you can see here's the zero level right here. Most of the time, this is going to be in an area of what we'd call contango. In other words, the VIX is going to be the VIX is going to be, the present value of the VIX is going to be lower than the future value of the VIX. That would be anything under the zero level. And I'm below, and that's where my line is right now, the zero line. And you can see most of the time that's where we're at. We spiked up though, showing there was more uncertainty in the market, and the expectation is in the future it would drop. Probably not surprising when the VIX spiked up very high. You can see how high that, how high the difference got at that point. We've come down significantly, but we're still positive on that level. And one way to interpret that is to say, hey, the expectation is the difference between the current level of the VIX and the future level of the VIX. The expectation is, I think from the market, one interpretation is that it's going to continue to go down, that the VIX is going to come down. And if expectations are the VIX is going to come down, that would actually be kind of a bullish sign for the market going out into the future. Any thoughts on the VIX or VIX futures here, Brett?
No, I think you've done a great job kind of covering that expectation, and the VIX, what the market doesn't like is that uncertainty, right? And the VIX will kind of incorporate a lot of that. And that's what we're seeing kind of across the board with, I still see a lot of comments about fundamental analysis or macroeconomics. And in that, I think that's a big concern with consumer spending and everything else. It all ties together. How do people feel? Are they comfortable? I mean, we haven't really seen results of any of the tariffs or anything else that have really come out and impacted stuff. It's all been talk, and it's all about how people are feeling about it, right? And so, actually, their spending was still holding up okay in one of the recent reports I saw. So I think it's just that uneasiness, not only on the consumer side, but also on the business side, just wondering what's happening out there. And I think, the VIX is sitting there. I like how you pointed out the mix there with both the VIX and the VIX futures. But, it's that uncertainty that's really kind of sitting on the market. And, if something happens, you can see that spike real strong, but still holding. It came back to a support level, and we'll see if this stays here or if it's going to rise back up, and then the market could take it a turn to the downside.
Yeah. So certainly the market is driven by uncertainty now. We can see that reflected in the VIX. You can also see that reflected in some other areas as well. Let's take a look at gold here, Brad. We're looking at the future. We're not trading futures today, but I just want to look at the level of gold. And you can see the run we've had. We're a little bit off the highs, but certainly gold is an area of, when there's more uncertainty in the market, gold tends to go up in price. General correlation there. Not always, and we've seen a little bit of pullback as the market has pulled back as well. But as the market actually went up and recovered a little bit, also there's a correlation between that and the dollar. And let me just point out something to everybody. There is a survey link in the chat here right now, and so we'd always appreciate your feedback. Love to hear from you. So I want you guys to look at that gold chart that I have up there right now and think about that. But also now consider what the US dollar has been doing. They're almost like inverse of one another. There's a pretty strong negative correlation between the dollar and gold. And you can see as that dollar it's weakened, gold went up. And lately, the decline of the dollar has stopped for the last couple of weeks, and gold prices have pulled back a little bit now. But I think gold is certainly a reflection of uncertainty in the market. Also, another thing that could be kind of a reflection of market uncertainty is crude oil. So here's crude oil, and trade talk uncertainty. One thing when you talk about oil, there's supply and there's demand, and it's not just demand, it's expectations of future demand. And I think with a lot of uncertainty in the market, we're seeing oil prices get hit there on this. Any thoughts on oil there, Brett?
Well, yeah, obviously it's dropped down, and this is interesting. I kind of smile about this because I was just thinking about the recent durable goods orders that report that came in, and it was actually flat. It was not very good, except for when you look at. Actually, let me reverse that. It was really strong, except for when you take out airlines. Right? There's a huge purchase for airlines or airplanes, and so with that, it made it strong. You take that out, it was flat. And so, obviously, looking down the road, the airlines are still looking at travel that could be happening. But in the short term here, we haven't seen this, and this also ties. It's interesting to see this go down with the dollar go down, which is something that isn't usually the case. But we have seen a dip in that. In the overall demand on that, and transportations. I think we'll get to that. Looking at the sectors a little bit. Yeah, you got that there on the sectors, but those are all things to look in conjunction with one another. And I think we can all, when we see, I think we're all getting concerned when we see those prices of oil go up, right? Because it all impacts us in the pocketbook as we travel. And I was wondering, how is this going to play out as we come into the summer months? Because we're close to May, we're going to be coming into the Labor Day, and then the times that people start to travel. So it's actually nice to see that drop down a little bit. We'll see if that holds. And it is interesting that it did rally back up to that 65, rolled over, and dropped back down.
Yep. So, and I think Brett, if we do get, I think if we see uncertainty lessening in the market and more economic strength, what you're going to see, of course, there's a lot of factors in there, but what you'd probably see is oil prices start to go up. And so I know for all of us who are like filling up our cars at the pump, it's nice to see oil lower, but the reality is it may be a sign of a strengthening economy in there. Now, let's hit up some questions here that came across in the chat. One, Villager said, is there a negative correlation between the U.S. and international markets? Let's just take a look at a few international markets here and just see. We've seen, of course, the U.S., this is the SPX, and I've got a 6-month chart, and you can see what this is doing. But as we look at some others, here's France, here's the French markets, and you can see that it's taken a hit as well there. Here's the FTSE, this is the UK market. It's taken a hit as well. Not as big, not as strong a hit as the U.S. has taken a hit with. But here's the Hang Seng, okay? So Asian markets have taken a hit as well. Not as strong a hit as the U.S. Has taken. So it's not a negative correlation. They're not going opposite, but it's not near the dive that they've seen. Now, one market that actually, let me go to the German market. Again, German markets held up pretty well off their highs. Take a look at, this is Brazil. Brazil's at new highs here right now. So not all international markets are created equal. And right now, a lot of these markets are outperforming the U.S. Well, for the most part, the U.S. has been one of the strongest performing markets over the past few years, but it's lately, it's been one of the weaker ones. There was a couple other questions here. A comment from George. George said the correlation between the dollar and gold is about minus 90% over the last 30 days. So a minus 100%, in other words, would be like a perfect negative correlation. If when one goes up, the other one goes down the equal amount. In this case, about 90% is a very high inverse correlation on there. And one other thing, one of the requests was to look at the copper markets. Getting hit today there. I don't know that, but that is a big drop in copper down. And Bob says down 6% pre-market, and 6% now, 6.5% right now on that. Any more thoughts before we head on to the earnings calendar here, Brett?
Yeah, that's a good thing to shift over to. There's a lot of earnings coming out this week. Some big companies. We got to take a look at them.
Yeah, let's do it. So this week is the biggest earnings release week on the S&P 500. And, next week will be a big week too, but this is really the week here. So I'm just looking at S&P 100 stocks just to try and narrow it down a little bit here for us, so we're not having to go through as many. Yesterday, Honeywell, UPS, Pfizer, Coke, and many more, including one I wanted to point out, and that is Starbucks came out with earnings. So let's just take a quick look at Starbucks and see how they're faring. And last I checked, they weren't faring very well, but we'll see. We'll see what Starbucks looks. Ooh, what's up on this chart here, Brett? What would you say?
Well, the gap down isn't beneficial for Starbucks, right? You can see overall downward channel or downward trend that it was going in. And it's kind of in that sideways holding pattern for a couple days, waiting for that earnings announcement to come out. And now that earnings announcement was not favorable, regardless of what it said. Investors, traders did not like it and did gap to the lower side. So what's interesting on these, Brent, is when it gaps down like that, is where does it go from here? Does it fill the gap? And you'll often hear people say, "Oh, it has to fill the gap." Well, it may fill the gap eventually, but often, it doesn't have to fill it immediately, right? And so it wouldn't be surprising to see it drop down a little bit from here and rally back up to the spot where you just drew at 70. What is that about? So we'll just say 78. Is that resistance? So that wouldn't be surprising to see. But again, it's like we were talking about with the SPX. It's still early in the day. Let's see where this closes, right?
Yeah.
Let's see what happens at the end of the day and then go from there. But the gap now looking favorable, and that's a pretty. I mean, got a couple hits in there. It's a
down 8%, Brett. It's so that's not a bullish thing by any means. We can look and see where we finish. And if we can break above and end up near the high of the day, that would be maybe a good sign for it. Starbucks is a company that has struggled. They brought in a new CEO last year, hoping to turn things around. So far, not looking great here on this. They got a downgrade from Goldman Sachs today with the earnings report. So we'll see how that plays out on that. So that was one prominent one that came out with earnings. I think FSLR also had some downgrades off on earnings about over 10%. So kind of the same thing. Trend has been down. We've hit some lows here. If we can hopefully, I'm trying to be the bright side of things here, and despite the 10% drop, if we can hold that support, I guess that would be a win for FSLR right now.
Well, from a technical standpoint, this is quite different from Starbucks. Starbucks broke below a level of support and has rallied back up to it, right?
Yeah.
First Solar here has gapped down to that level of support. So from a technical standpoint, completely different setup on that. And so
it is. It looked like things were improving. It looked like things were maybe starting to improve a little bit with your trend there, but often it takes an earnings to whatever technical analysis you do before earnings, I often say, can quickly go out the window once earnings comes out, because that can certainly change the narrative pretty quickly on that. Let's go and look at some upcoming earnings here. Let me go back to that market watch and earnings. So today we've got some big earnings coming out. Today is the 30th, and Caterpillar, big company. MetLife, pretty big company. But really, it's all going to be all about these tech companies, these big mega cap companies over the next few days. We've got Meta, Microsoft, and Qualcomm all coming out after the close today. Tomorrow, we've got, in addition to a bunch of other big names, we have Apple and Amazon. So talk about between those, that's a huge amount of market cap between those companies. let's take a quick look at some of those stocks here and just see what we have going into earnings. Coming out after earnings today, we've got Microsoft here, Brett. One thing I would say here is from a technical standpoint, I'd probably call this kind of a resistance level. What are your thoughts technically on Microsoft here on this?
What you're seeing here is a setup you'll see on a lot of tech stocks right now, where it's had some sort of a double bottom, a triple bottom, a couple of handles, some sort of a kind of a bottom reversal formation. But this one, Microsoft, has been unable to break above the resistance line that you just drew. Now, this is interesting because it's possible that the earnings could be the catalyst, if it's good, to jump it above it, right? Give it the energy it needs to break above that ceiling. So that's going to be one to watch, see what happens tomorrow morning.
Yep, and we also have Meta coming out. Take a quick look at that. Here's Meta. Again, I mean, I would say in terms of what stands out real quickly is the trend that we've had here. Bouncing off that could be a reversal, but again, I mean, the performance has just been not great with a recent recovery, but certainly no uptrend at this point.
No, still in the downtrend, and so again, it'll be interesting to see what happens. Will that break above the 550-ish level on the earnings announcement, or could it drop back down to the 479 level? Something like what we saw on, what was that, First Solar and Starbucks, right? That had the gap down.
Yep.
So a couple to keep an eye on for sure.
Here's Qualcomm. Same deal here. I mean, this is a resistance that kind of goes back this far. Support level, old support becomes new resistance. We gap down from there, basically tested it, rolling over. Again, maybe earnings will be the catalyst to change that. Coming out tomorrow, we've got Apple. Same deal. I'd obviously previously drawn a line in there on Apple. This actually has been looking a little stronger than some of the others lately, although the first part of the year was terrible. But we have a little bit of almost an ascending triangle there on that, Brett. That's a little bit more of an extended recovery than some of the others.
Yeah, true. And it had the run up to resistance and the pullback, essentially making on a very short term a higher low. And so that gives a little more technical credibility to some energy building here, right? But it looks like it's winding up, almost like a coil phase coming into that earnings, as people are possibly just sitting tight, waiting to see what happens with the earnings and then taking a move after that.
These are the big companies in the market that have really led the market down. A little bit of a recovery here. And normally in the market, I would say, when you have these big earnings, that is what's going to drive the market. There's enough other uncertainty out there in the market right now that earnings is maybe taken a little bit of a lesser role this time around, although the next couple days are just such big earnings, maybe not so much. But some of these companies, a lot of times it's the guidance with the company that is going to drive what the reaction to earnings is. Not what the top line was, not what the bottom line was, but what their guidance for the future is. But what some of these companies are saying right now is, we don't really know what the future is going to be because there's enough uncertainty out there in the market, in the economy, that we're not going to give you a solid guidance. And so there's a little less maybe to be taken from that, and earnings maybe a little bit less of a factor this time around. One more of these big kind of Mag 7 stocks that we're going to look at, kind of the same thing though. I mean, we've rallied up, bounced off a potential resistance level that we had there, and coming down. All these stocks are down, and if we're going to see a meaningful change in the market, it may come from a reversal in some of these large cap stocks there. Any other comments, any other thoughts on earnings season here before we move on here, Brett?
I think we're good. I think, as we were showing here, so many of these stocks are lining up the same way, very similar look on a lot of them. Just most of them tend to be below that support level, and so I like what you're saying that earnings will be the catalyst to get them above it.
Yep, and a lot of traders are reluctant to trade before earnings here. Let me just clear my chart here. To do a trade before earnings because of just the uncertainty with earnings. And so if you are looking to trade, and we can do sample trades in this class, these are just examples, of course. You may look at different charts, and here's Tesla, obviously a name everybody knows. It's a company that came out with earnings last week. Last week. And it's actually reacted fairly positively to the earnings. What are any technical thoughts on Tesla here, Brett?
Well, Tesla sets up a little bit differently than the others we talked about, where a lot of them were below a resistance level or struggled. Earnings came out and it dropped down to a support level, but basically they struggled to rally. Tesla's a little bit different. If you can draw us a support level on that, maybe zoom in. Thank you, Brent. Zoom in, maybe some support down around the 220 level, and then some resistance up around the maybe 285-ish. So somewhere back at right about there. That old resistance was back in March. And so this is one that's kind of in a channel going sideways, right? The news report came out with the earnings. It did rally back up to resistance. It actually went slightly higher than it did back in March. And so this was looking this morning at a potential breakout of that resistance. And so it was one we were just checking out. Now, with the new or GDP this morning and everything else that's happened, we've seen a pullback on this, like we've seen with some others. And so, maybe as we were talking about, looking at that breakout this morning, maybe that didn't materialize, but still, it's winding up here and pushing along those tops. And so it'd be something maybe to keep an eye on. Potentially we could go in and place a paper trade on there if it even comes back a little bit, maybe give ourselves some room with maybe a vertical spread.
Yeah, so I think what you're saying is we could consider this a resistance level. Okay, so I'm just going to put an R here for resistance. And we can put in a trade and we can say, look, we're only going to get in this trade if we break back above that resistance level. In other words, we can put in a contingent order to get in the trade if the stock goes up. And if it doesn't, if it stays where it's at, we're just going to sit on the sidelines here. So we can put in an order here. Now, this level right here was, let's see, let me just get out of my little drawing tool here. This level right here was around $290. So we're going to say we want to break above, say, 295 on this. So I'm going to go to the trade tab, and we're going to do an option trade on this. So I'm going to go out, and I'll go out, I'm going to go about 3 weeks or so. And I'm going to do a short put vertical spread. But what I'm going to say is I'm going to get in only if the stock goes above 290. Let me just jot that down. So I'm going to say, what if we do a short put vertical where we sell a strike down here? If the stock's up at 290, we sell like at 280 and then buy a 275. So here's how the trade would work. I'm going to put in an order to sell a 280 by clicking on the bid price. I'm going to hold down my control key, click on the ask price there. That's going to give us a short put vertical spread on this. What do we want on this trade? We want the stock to stay above 280. What's going to give us confidence, although there's certainly no assurity, but what's going to give us confidence it's going to stay above 280? The fact that we're only going to get in if we break above this old resistance level, presumably a new support once it's broken there. So that's, when you're looking at a trade, one thing that some traders will do is they will wait till earnings have passed. You'll look for a pattern. In this case, we have a channel. We're going to look for an actual trigger or entry on that. Maybe it's a bounce. Maybe it's a break below a support level or above a resistance level. In this case, we're waiting for the break above the resistance level. So if we're going to do that as a sample trade, what I'm going to do is I'm going to say, I only want to get in this trade if the stock goes above 290. How am I going to do that? I'm going to just change this order to market. I'm going to make it a good till canceled order. I'm going to click on my gear right here, and it's going to bring up this screen. And I'm going to put in some rules, some conditions on that order. I'm going to click on symbol, Tesla, marks, greater than or equal to, and we said 290. Okay, 290. Now you could pick whatever level you want. If you want to give it a little more room and say 293 or something like that, you can do that. It doesn't need to be a round number by any means. And then I can save that. And here's an order. Now, when I click and confirm and send, it's not going to fill right away because the stock's not above 290. Let me click on send, and we have that order. And now I have another order in here. If our stock breaks above 290 to do a short put vertical. Any other comments on that trade there, Brett?
No, so there's just different ways to approach it, right? You can set that order anticipating the breakout. One could wait for it to even possibly pull back and see if they get a bounce off of the bottom of that channel. And it's just really how aggressive someone wants to be. There's not necessarily a right or wrong. It's just different traders have different approaches, different pain points or risk tolerance. And so it's going to be interesting to see what happens here. As that was closing above it, or it closed above the resistance yesterday. It's looking more like a breakout. The news pulled it back a little bit. But again, let's see where this closes at the end of the day. And, some of these other news reports that come out here shortly could also impact Tesla. So it's going to be an interesting week for sure.
Yes. So just to kind of summarize on this, when you're looking at entries, look for your spots, right? If you're a batter in baseball, you don't have to swing at every pitch. In fact, you know what? You can just let pitch by pitch go by and wait for your pitch. In this case, for this sample trade, what we said is we're looking for a breakout, and we'll get in on a breakout. What other ways could we approach that? Well, as Brett just mentioned, we could wait for a bounce off this support level. Now, obviously, that would entail waiting around. I don't know how long, maybe a week, maybe more, maybe it would never get there. But we could possibly look at a trade that would bounce there. Could we do a bearish trade right now, anticipating us going down here? Yeah, we could do a bearish trade right there as a possibility. Could we do a bearish trade if we break support down here? We could do a bearish trade if we break support down here. So any one potential stock can lend itself to a lot of different potential trades. It just depends what entry signal you are looking for there on that. Okay, so that's Tesla here, and we are running low on time. In fact, I think we're going to need to wrap it up here in just a sec here, Brett. Let me just address any questions we have. John P. said, is this wait till it goes up breakout idea only good for spread trades, which is what we just did, or can you do it on single options? You can do it on single options as well there, John. In fact, I do it all the time in my long options class, which is on Tuesdays. Go to the playlists, go to the Trader Talks Schwab channel, and you know what? Barb was nice enough to put in the playlist in the chat for us for that class. You can see that, and I do that type of trade all the time in that class as sample trades, contingent trades of getting in on a breakout there. So thank you, Barb, for helping us out as always. And yeah, a lot of uncertainty today. What did we talk about? We talked about major markets, where they're going. We focused on earnings today. on some of these companies that have just had earnings or are about to come out with earnings. We did a sample trade, an example trade, trying to illustrate that whatever your forecast is, there's a potential trade that you can look at on that trade. Now, it doesn't mean we're not making any recommendations there. Any final thoughts today, Brett? Here before we sign off.
No, I just appreciate being on with you again. It's like we mentioned in the beginning. It's been a while, and it's good to be with you.
Well, I'm glad to have you. Hopefully we do that again soon. Kevin is back tomorrow. I think everybody for Trader Talks, and everybody have a wonderful day. We'll see how the market reacts, how the market ends the day. But I want to thank you all for joining us. Make sure you subscribe. Make sure you follow us on X at Brentmore CS, at Barb Armstrong CS, and at Brett Crowther CS. And Barb, thanks again. Everybody have a wonderful rest of the day. Bye-bye, everybody.